All right, it seems that most everyone has tuned in. Again, we'll just do a bit of housekeeping. Thank you everyone very much for joining with us today. Keep in mind, all of your audio has been muted on your end. So if you do have a question, please do type that into the chat box. We will address those as they come about. So again, just making sure that you do type those in, and we will get those addressed. Other than that, the slides are attached as a handout here, so you can grab them directly from this presentation and download them directly. You can certainly email myself or Josh at the end of this, and we can certainly fire out the slides to you as well. With that said, we'll go ahead and get started. Today, we're going to be looking at investing and developing townhomes. This is a really interesting market that is really kind of often overlooked in real estate. You know, it's that nice bridge in the equation from going from the true single family investor developer to the larger commercial multifamily space. There's definitely a need for this kind of development and investment strategy, and Josh will certainly be able to tell us all about it. We also had Josh on one of our podcasts, is how we got kind of connected. I had him on our Alternative Investing Advantage podcast, and it was great content. We wanted to bring it to a little bit of a broader audience as well. So again, we're very pleased to welcome on Josh to this presentation. I'll go ahead. A little bit about myself. My name is Alex Perny. I work in business development and outside sales and education for Advanta IRA. I've been doing this since 2012. If you have any questions on the IRA side of things, I am more than happy to help you out. All my direct contact information is there. And even if you have more technical questions on how this might be an employable strategy for you, I did cut my teeth in the operations and the actual investment side of this equation for about 6 years. So had a lot of hands in, had a hand in a lot of capital deployment for clients, as well as seeing how they structure these things. So I'm more than happy to dive into that with you as well. A little bit of a disclaimer before we get started. Advanta IRA and our employees do not provide investment advice, nor do we endorse or promote any investment products. All information and materials are for educational purposes only, and all parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. A little bit about Advanta IRA. We're a self-directed retirement plan administrator. We serve clients nation and worldwide. So no matter where you're located, if you have an IRA or an old 401k, we are more than happy to help you out with that to get those funds deployed in a manner that you see fit. We have well over 20 years of industry experience. A lot of employees here at Advanta have well over 7, 10, sometimes even like me have 13, 14, sometimes full 20 years of experience in this industry. So we're very happy to be able to lean on that large core of competent professionals that can really help you out with doing these kind of alternative investments, because there's just, not a whole lot of information out there about them. Hence why we like to do a lot of these free educational webinars for people. Again, we have clients across the nation and world. We currently administer over $3 billion worth of these types of class of assets under administration for our clients, and we're very happy and proud to share with people, because it certainly does show that people at a very large rate are starting to adopt this kind of thinking when it comes to investing their retirement plans. And again, doing self-direction, especially if you're a little bit newer to this, you're not giving up any of your typical suite of protections that you're used to in a normal banking relationship. All uninvested cash deposits are still FDIC insured, carry Arizona emissions insurance, fidelity bonds for all of our employees. So again, anything that you're normally used to with working with a large wirehouse for doing more traditional stock, bond, mutual fund, ETF investments is still applied to the accounts here. But again, all investments do carry risk, and those are borne by the investor directly. And here at Advanta, we do strongly believe in the customer experience. We have dedicated client management for every single account, whether it's a $5,000 account that someone's going to be doing some wholesaling and options in, up to a $5 million account. We aim to give the same excellent level of service with dedicated representation for all of our clients. So if you're interested in doing this kind of investing, whether it's in townhomes or some other type of alternative asset structure, please don't hesitate to give us a call. We're certainly happy to help. But enough about Advanta. We like to make sure that we give the lion's share of the time over to our guests that take some of their valuable time out of their day to come and educate our client base. So Josh, thank you very much for being on with us today. Really looking forward to diving into this with a broader audience of our clients and investors alike. So if you wouldn't mind, give us a little bit of background about yourself, and then we'll dive into the topic at hand, which is right there on the screen, investing in townhomes. Thank you so much for joining with us today.
Yeah, thanks, Alex. Thanks for the opportunity. I'm excited to be here and to talk about townhomes. It's, of all the asset classes that are out there, it's what I've chosen to invest in. And so I'm excited to talk about it. And um, yeah, I've had a great conversation with Alex a while back about the same thing about townhomes. And so excited to be back on and have this opportunity, and, really impressed with Advanta and the resources that they offer, and kind of the more I learn about the company and the way that they help different people, from an investor standpoint, and also, from more of my standpoint of, trying to raise money for deals, and how I can work with them on getting self-directed investors in. So I will give you just a quick, this is kind of where I plan to go today. So just giving you a little agenda. I'll tell you a little bit about myself. Kind of talk about what is a townhome. You may have heard this term, build to rent, or BTR. We'll talk about that. And then I wanted to talk about townhomes from a few different perspectives, from a tenant perspective, from a builder developer, and then from an owner investor perspective. And then I'd love to leave some time open at the end for questions. So a little bit about myself. My background is my background is in multifamily appraisal and consulting. And I did that for about 11 years. I'm based here in Salt Lake City, Utah. And so for 11 years, I worked in appraisal and consulting, specifically for apartments, kind of every type of rental housing. And I did that all over Utah, kind of Wyoming, Idaho, kind of surrounding states. And it was a really great background for what I'm doing now, which is, investing and building. I got great experience in valuation and underwriting, in market analysis. And, after a while, one of the downsides of being an appraiser is you have a lot of people mad at you all the time for, the values never, comes in where people want. And so that kind of started to be a little bit of a grind, but I love the consulting side, and about half of our business was consulting and working with developers, helping them figure out the best use of their property, and really kind of giving them a blueprint, or kind of a business plan of what to go build. And after seeing some of our clients, take the plan that I worked on and seeing them go build it and sell it, and did really well for themselves. And so I decided I was, kind of on the wrong side of those transactions, and got me interested in making the jump to development. And I went back to school. I did the University of Utah has a master's in real estate development program. I went through that program, loved it, got recruited to work for a residential developer here in Utah after I graduated. And got to work on, I did all of their underwriting, finance, debt, equity, market analysis, and ended up working on, kind of over 20 different projects in the time I was there, and everything from kind of 3-unit infill townhomes up to 200 plus units rental communities. Did some single family homes and some other things there. I've always wanted to do my own thing, and so a couple of years ago I decided it was kind of now or never. And so I quit my job to start Alchemy Design and Development, which is my development and consulting company, and Traverse Capital, which is we do, similar to Advanta, we do a lot of investor education, and then we also raise capital for investment projects. So, through my experience at being an appraiser over those 11 years, I saw a lot of different types of properties, and townhomes were always something that was interesting to me. Maybe it was because I related more, that was the type of housing that I would choose to live in if I were renting. And so for a long time, and there's been an evolution, I'm sure you've seen in your markets as well. But for a long time, this was kind of what you see on the screen. This was kind of what there was, right? It was a lot of townhomes built in kind of the 70s through the 90s. They tended to be pretty small units. Most didn't have attached garages. And through appraisal and consulting, there was a local developer here that started doing something different. Started building these kind of more modern, purpose-built rental communities, small communities of 20 to 30-ish kind of units, and started building these infill communities. And I loved the modern design. I loved, the attached garages. Um, I just really resonated with what they were doing. And over time, this is more developers have caught on to this idea, and we see a lot of this type of development here now. And kind of coming at it from the appraiser and consultant background, I could see the value and the demand in this type of housing. So let's just talk a little bit about what is a townhome. And if I put some images up here, I'm sure we'd all recognize these as being townhomes. But really, all a townhome is it's just a building type, and they're generally 2 to 4 stories tall, and they share at least one wall with a neighboring unit. They can be for sale, they can be for rent. There's a lot of different variations, right? You could have a yard included, you could have a rooftop deck. There's a lot of different variations, but it's really just a building type that is 2 to 4 stories, shares at least one wall with a neighbor. And depending on how they're built, they can be sold individually. They can be part of a bigger community for rent. You may or may not own the land underneath the unit. And really, the difference is just in how many walls are shared, right? So if you think about a detached single-family home, it doesn't share any walls with neighbors, right? It's fully detached. And an apartment could share more than one wall. You could share, 2 walls plus a floor and a ceiling, right, with a neighbor. So that's kind of the simple definition of a townhome. And you may have heard the term build to rent, or BTR, it's sometimes abbreviated. And so I kind of just wanted to talk about what that is, or what that means if you're not familiar with that term. And townhomes have been around really for a long time, right? You think about kind of the brownstones of New York, and even in Europe, like this type of housing it's not new, right? But there's been a lot of buzz around this term build to rent, or BTR, and really all it is it happened through kind of home builders and institutional type investors kind of needed a term to define this this new product, new for them product. And so where home builders traditionally were built to sell, developers, build to rent was just distinguished this new strategy for them, which was, instead of building this community and selling off individual homes, we're going to build the community and keep it as a rental. And some of these communities now, they either single family homes or townhomes, they have a lot of the same amenities as a traditional multifamily would have. So you see pools and clubhouses, pools, gyms, dog parks, all of those things. And I just did a quick Google search and clipped some headlines talking about build to rent. And so there is a lot of buzz about it right now, and has been for the past several years. And there's a lot of money ready to invest in this type of property. And so we'll kind of get into why there's so much interest in investing in these types of properties. So again, I wanted to kind of talk about it come at it from 3 different perspectives. From the tenant perspective, from the builder, developer, and then from the owner investor. And so let's talk about the tenant perspective. So this chart, this is kind of Utah specific, but it would look really similar if we looked nationwide. This is from my friend Dayon Eskich at the Kim Gardner Policy Institute here in Salt Lake City. So this is looking at the cost of renting versus owning along the Wasatch Front here in Utah. And there's a huge gap. You can see the red line is the cost of ownership, and the gray line is the cost of renting, the monthly cost. And so there's a huge gap there, and it's only gotten worse as interest rates have gone up, and home prices have gone up. It's really hard for someone now that would otherwise be a home buyer to buy something, just because of that, because of the cost. And right now in Utah, it's about a $1,500 a month difference in renting versus owning. and again, we're talking about single family homes. Townhomes kind of fall into that category here too. So it's about a $1,500 difference, and that's huge for a tenant, right? That would otherwise, maybe be a first-time home buyer, be looking to buy their first home, a townhome. That's a big gap to overcome. And this will change as things happen with interest rates, but I don't foresee in the near future, this gap closing, significantly. And what this doesn't include is maintenance costs associated with home ownership. And so, John Burns Real Estate Consulting, if you follow them at all, just great information. But they do surveys of tenants that live in build-to-rent type housing. And one of the number one reasons that one of the number one draws for tenants moving to that type of housing is that they don't have to deal with maintenance. And so if we added, going back to that other chart, if we added maintenance costs to that, what's already that $1,500 gap, when your water heater goes out as a homeowner, you've got to pay for that, right? Or pay for someone to come in and replace that for you. Where if you're living in, a townhome for rent in one of these communities, that's kind of included in your monthly rent, right? You just call the manager and they'll send over their maintenance team to come and fix it for you. You don't pay any extra for that maintenance. And so that's really one of the big draws for tenants is not only professional maintenance, but also professional management. So you're getting the same level of care of management throughout the whole community, and the same level of maintenance and upkeep.
Just Josh, real quick, I just want to interject. Someone, the raised hand function on the presentation doesn't necessarily do anything. If you do have a question, type it into the chat box and we can pose that to Josh here as we go along. But just see someone raise their hand, just go ahead and type in that question and we'll get it posed over to him. But that was basically, I'll turn it back over to you, Josh.
Okay, perfect, thanks. Yeah, and I'd love to answer your questions too as we go. So another trend has been towards smaller and smaller units, and this is an extreme example of in Hong Kong, I think, but it's not really what people want anymore. It works for developers to fit more units on the same property. It helps boost returns that way from a developer investor standpoint. But it's not really what everyone wants, right? And as kind of tenants get older and they start forming families, they really kind of need more space, right? And so that's an advantage of townhomes or single family homes as rentals, is it does give you a little bit more space and more breathing room. And this trend was kind of just accelerated through COVID. So if you remember during quarantine, if you were living in an apartment or a small unit at the time, you probably that probably kind of wore on you a little bit, or it did a lot of people, and they just felt like they were just cooped up. And so when we kind of came out of quarantine, there was a big group of people that were ready to move into something with a little more space, a little more breathing room. Another couple trends pictured in this image to come out of COVID were remote work and also pets. And so being able to have a little bit more space with more people working from home, having a little more space in a townhome versus maybe a more traditional apartment where you can set up a dedicated office, a dedicated space with a background for all the Zoom calls that we're all doing now. That's become more important. And so a townhome kind of helps facilitate that, makes it easier for the work from home situation. And then pets, right? There was a huge surge in pet ownership, and my family and I, we were part of that trend. We got a little golden doodle during COVID, and there were a lot of people that did the same thing. And so pets have become more important, and having space for your pets in your home, and also through some of these kind of community amenities, having a dog park, that's become a lot more important too. And so a townhome kind of checks a lot of these boxes for tenants now. And again, like we talked about, a lot of the newer built to rent communities, the bigger ones especially, they're fully amenitized. You have the same level of amenities that you would in a more traditional kind of multifamily apartment type community. This is a picture of a project that I love here in Salt Lake City. They're all townhomes for rent. They have an amazing pool, clubhouse, kind of gathering area, great gym. They've got all kinds of dog parks and amenities. And then here in Utah, a big thing is having a garage, right? We get a lot of snow here, and so most of the townhomes that are built here are built with an attached 1 or 2 car garage, and that's a huge benefit for a tenant. That's we are kind of a commuter community, right? A lot of people commute to work, and so most people have 1 or 2 cars, and we also have a lot of recreational opportunities, and so a lot of people have their skis and kayaks and mountain bikes and everything else for the weekends, getting up into the mountains. And so having a private attached 2-car garage or 1 or 2 car garage attached to your unit that has more space than an apartment, it's really an advantage too, and it's something that people, especially here in Utah, they really love that, right? And it's a big deal. Otherwise, if you didn't have that, you'd be paying an extra, $150 a month to rent a garage or a storage unit somewhere else. So hopefully you can see that's kind of the tenant perspective. There's a lot of reasons why, there's been kind of a shift towards this type of housing over more traditional apartments. So I want to talk now about the kind of the builder and developer perspective. I put this image up here, kind of as a, kind of a fun image, but townhomes can be a little bit easier to get approved through cities and municipalities. It's a little bit more of a gentle density and a little bit more of an incremental density versus, if you were a developer and going into a kind of a single family neighborhood, proposing to build a big, 6-story apartment building, you'd probably face a lot more opposition trying to get that project through than you would a townhome community, right? And again, it varies by municipality and by community. There's still a lot of places in America that they just want detached single-family homes on quarter-acre lots, but it can be a little bit easier to get approved. Another great thing about townhomes is they're relatively easy to build. And it's much more like building a single-family home in construction. There's no, underground parking. There's no, big concrete parking structures that you have to deal with like you would on some other apartment communities. And really, it's pretty simple. It's a 2 or 3-story home. Basically, it's just attached to other homes. And so for our contractor and for each of the trades, it's really easy to work in one building and then kind of move to the next and move to the next. Because they're more like single family homes, sometimes you can also pull from a more residential type subcontractor base that maybe doesn't have as much overhead costs as a bigger contractor or a bigger subcontractor would. And so that sometimes can save a little bit of money on construction costs. And it's really this is a picture of one of our projects in southern Utah, and you can kind of see the process, right? You can see the one building that's got the stucco and the exteriors up. We're moving on to the next building now. We're working on the exteriors, and it's really kind of easy once for our subcontractors and our contractor. Once they finish one building, it's just kind of repeating the same thing over and over, and so it's relatively easy on the construction side. And then another great thing about townhomes from a builder developer standpoint is we can lease up, we can rent these buildings out as they're finished, right? And so again, this is our project in southern Utah. So that building that you saw with the exteriors up on the last picture, that will be our first building to deliver. So as soon as that building's done and we have certificate of occupancy from the city, our property management company can move people in there. They start paying rent right away, even while we're still building through the rest of the project. And the difference there is, if you were to build a big apartment building, you would have to wait for the entire building to be finished before you could start moving people in and collecting rent. And so you can kind of see the process here. We start with building one, we move people in there while we're still building, and we kind of just build and lease up the community as we go. So now I want to talk about kind of the owner and investor perspective. And I'm gonna take you back to Econ 101, looking at this supply and demand chart that you may recognize from your Econ 101 days. It really all comes back to supply and demand. And what I'm hoping to show in the next few slides is that townhomes as a rental townhomes as an investment opportunity has been outperforming more traditional multifamily, and it comes back to supply and demand. I'm lucky to be able to teach a course at the University of Utah in real estate market analysis, and we hammer this into our students, the supply and demand and how they interact when looking for opportunities. And there's a great opportunity right now with if you remember from Econ 101 days, when there's a lot of demand and there's not a lot of supply, that pushes the pricing up, right? And we'll see that in the next few slides. But it's for investors, it's a great opportunity because of that, because it's outperforming other types of rental housing because of that supply and demand imbalance. So I love following Jay Parsons on LinkedIn. He's a housing researcher, and I don't want to lose you here with all this text, but he's got a really just very insightful into what's going on with the rental market. And I love, this was something that he posted on LinkedIn just recently. That he's saying basically that even in a time right now where we have in a lot of places more supply than we've ever had before, with all the cheap money, there was a huge surge in apartment development and construction. And even for tenants right now that have more options than ever, they're still choosing larger and pricier build to rent type housing like townhomes and detached rental homes. Even with all the opportunities and options that there are now, that's what people are choosing. So going back to that kind of supply and demand, this is showing that the demand, right? That even with all those choices, the demand has shifted through a lot of the things that we talked about on the tenant perspective, just a change in what people want, right? So the demand is going up for this type of housing. And this chart is a little bit busy too, but this is one of the ways we can see that imbalance in supply and demand is looking at occupancy rates. So occupancy is just how full a community is, right? And so there's a lot of lines here, but if you focus on the green line, which is townhomes, townhome rental communities, it's sitting at about 96% occupancy. And just to give a little bit of perspective, coming from the appraisal world, kind of a stabilized stabilized occupancy is about 95%. That's kind of what we're trying to hit, right? And so we're seeing here that there's occupancy rates in townhomes for rent are higher than that. It's just again showing the demand. And just for comparison, nationwide, this is a national. This is from John Burns Real Estate Consulting, but just to give you a perspective, occupancy rates kind of on traditional multifamily housing nationwide have kind of gone down to below that 95% to sitting around 94%. And so again, just showing there's more demand for this type of housing, and it's outperforming more traditional types of rental housing. Okay, so let's talk about rent growth. This is another way that we can see kind of this imbalance, right? We talked about when demand is really high and the supply is not there to meet it, it puts upward pressure on pricing, or in this case on rents. So over the last year, in kind of traditional, what you'd think of as apartments, kind of garden style apartments or 5-story apartments, the rent growth has been about 1.5%, and that's down quite a bit from where we have been over the last several years. There were several years where we were pushing 5, 6, 7, 8, 10% in some markets rent growth from year to year. And so that's kind of come down. And a lot of that goes back to supply and demand. There's been so much of that type of product built that it's put downward pressure on rents. So compare that to build to rent, like townhomes and like single family homes for rent. Over the last year, rent has gone up, 3.5% almost on that type of product. So again, from an investor standpoint, hopefully you're kind of seeing the picture here that this specific type of product has been outperforming, more traditional types of residential housing. Another thing to think about from the investor standpoint is these are really, great tenants in general, right? They make good money. So again, John Burns' research it's more than half of these tenants have two incomes, and more than half of these households earn $100,000 or more per year. And so, these are households that are making good money. They're not defaulting on their rent. They're renting this type of unit, and their next move is going to be buying a house. And so they've got great incomes. They're able to make their payments, and they tend to stay for a long time. So if you're invested in rental housing, one of the places where you can lose money is through vacancy and through turnover costs. Over 60% of townhome rental tenants expect to stay there for 2 or 3 years. They're kind of putting down roots. Like I said, their next move is going to be buying a home. And just with the product type having more space, we all tend to fill up our space with more stuff and accumulate things over time. And with garages too, I've been in a lot of properties where there's an attached 2-car garage, and they use one side for a car, and then the other side is for all their stuff, right? And so having all that extra stuff, it makes someone want to stay there for a while. They don't want to have to move all of that. And then again, like I said, their next move is really buying a home, and so they're staying there until that makes sense for them to do that. And just as a kind of comparison, I should have looked up what the kind of average stay is for a more traditional multifamily tenant. I think it's probably around a year, or maybe just kind of a year and change. And so these are tenants that have good incomes. They tend to stay for a long time. And the rent is pretty good, from an owner perspective. About 70% of townhome tenants pay somewhere between $1,800 and $2,600 a month just in base rent. So that's not including, anything on top of that, for extra parking or, pet rent or, telecom or, any of these other things. This is just base rent. And so, I don't know where you're listening from. Maybe this doesn't seem like big numbers to you, but certainly for us here in Utah, to be able to rent a townhome for $2,300, $2,600, we've got some units here now that are renting for $3,000 to even pushing into $4,000 range for a townhomes. Those are big numbers for us. So the rents are great. And then, also from an investor standpoint, there's more exit opportunities, right? If you're building a community or buying a community with the purpose of renting it, you can keep it as a long-term rental. You have the option to sell it to another investor as a whole community. And depending on how the property has been platted, you may be able to sell, if the housing market changes, you may be able to sell off individual units. And there's pros and cons of each of those strategies, right? But it just gives you more options when it comes time for you to move on from this property to your whatever your next thing is. You've got more options on the exit. So just kind of to summarize, and then I'd love to take some questions. But townhomes of all the kind of different options that are out there, it's really a win-win-win. It's a win for tenants who are getting a type of product that they want, that has more space, a lot of times has garage, has room for their work from home situation, room for their pet. It's a win for builders and developers. They're relatively easy and simple to build, right? And there's potential cost savings by working with more kind of home builder type subcontractors. You can rent the units as you finish each building. And then from the owner investor standpoint, it's a win because hopefully, as you've seen through some of these slides, that this type of product is really outperforming other types of rental housing. And there's a lot of opportunities there that, you've got great, generalizing, but you've got great tenants that make good money, that can make their payment. They're going to stay there for a long time. And, that's where the demand is headed, and the supply hasn't caught up. And so you're seeing the benefits of increased rent and those kind of things. So that was kind of a really quick run through of, why, why I specifically choose to focus on this type of project to build and invest in. But I'd love to open it up for questions, and I don't know the answer to everything, but as best I can, I'd love to answer any questions that are out there.
Yeah, absolutely. Thanks, Josh, for that great information. So a couple of things. First, we'll address the question, then I kind of jotted down a few things I'd like you to elaborate a little bit more on. So one person asked, what would be like a typical investment amount, and what kind of, at least from the investor perspective, how are returns generated? And I'm assuming this kind of breaks down into two different categories. One, whether you are, the person going out and then acquiring these, versus someone that's going to be plugging in a more passive manner to a developer, right? Or someone that's going out and they're just more on the passive side. So maybe kind of go into kind of the price points and the investment points on both sides of that equation.
Yeah, and I can speak to, kind of how we structure our projects with our investors. So we do each of our projects as a standalone syndication. And so basically that's just, pooling a bunch of individual investors together to go build these projects with us. And, it's going to vary, depending on who you're investing with, or if you're doing this on your own. But for our investors, the kind of a minimum investment is $50,000 and up from there. We do everything kind of ground up development. We see the opportunities there. And so, it takes a little bit more time for our investors to start seeing a return, because we've got to build the project before we can start leasing it up. But we add a lot of value going through that process versus just acquiring something, right? And it's just risk and reward. There's less risk on, at buying or investing something that's existing. You don't have that development risk of, all those questions. But typically there's more upside, and you add more value by taking it through that ground up process. And so, our investors, they get a return through kind of normal operations of, we collect rent, we pay our expenses, and we pay our debt, and there's money left over there that gets distributed to our investors. So that's one way. When it makes sense for us to refinance the property, there's potentially a cash out refinance that goes back to our investors. And then ultimately our business plan is to build these, to operate them, and then to sell them to another investment company. And so, there's kind of the third way that investors get a return is through the sale, right? And the proceeds from the sale. And then, there's other benefits, along the way, depreciation. You can, as an investor, you can claim depreciation on your individual taxes that kind of offset some of your income. And I don't know if I answered your question. That's how we kind of structure our deal, and that's kind of what it looks like for our investors.
Yeah, no, I think that's definitely a great way to address that question. I see a few people peppering in questions regarding, like the expected returns and things like that. And I would say, if you have questions on things like that, I'd encourage you to reach out to Josh if you're, curious to know how he packages that. We like to keep things a little bit more educational than kind of talking specifically about, expected returns of a specific provider, especially if they're in that position. So I definitely encourage you to reach out to Josh. And Josh, would you mind, we definitely have some more questions, but plug your contact information if you would, so if people want that information, they can reach out directly. So I have his contact information slide up there. We'll just leave it on this one for the remainder. But again, specific things on returns, please just reach out to him directly. He can certainly address those. And then this next individual was asking a question I was kind of wanted to get into as well. Is it better to build with the developer or buy an existing townhome community? Any recommendations or data on market analysis looking to purchase their first one. Which was kind of, again, to the point of the question of, you kind of alluded to it of saying, hey, you do a lot of ground up development, but there's certainly townhomes out there, and a lot of the people in the commercial real estate space are really familiar with the quote value add proposition of acquiring and repositioning and adding value to things. So maybe kind of compare and contrast, those as it applies to maybe a newer investor.
Yeah, yeah, for sure. I'll do my best. Yeah, it kind of goes back to just kind of risk and reward, right? And that's different for each individual investor. Our investors like the idea of coming in from the ground up, knowing exactly what we're building. There's no surprises, right? Because we're building it from scratch, and so we know exactly what we're getting into. And again, there's potentially more risk by going through that process, but there's also there's potential for more reward by taking on that additional risk and going from ground up. And there's pros and cons to each strategy, right? If you're maybe a little more risk averse, then yeah, buying something that's already built, already leased, it could be more attractive, right? It's something you can jump right into, start collecting rent immediately, start seeing those benefits immediately versus waiting to go through construction. And what we do is we build whole communities. And I'm a small developer. I'm not building 100, 200 units at a time. We're building kind of infill communities of kind of 20 to 30 homes at a time. And so if you're an individual investor, even just looking to buy your first property, and there's opportunities still to buy individual townhomes, right? And hopefully through this presentation, you'll see that maybe that's something you should give some thought to if you're looking to just buy kind of an individual one unit to get started. Hopefully this has shown maybe why you might want to consider even an individual townhome as an investment over some other opportunities.
No, yeah, I think that definitely addresses it very well. Now, another interest, this is kind of one I wouldn't have thought to ask, but it's kind of has to do with the marketplace of the townhome investing arena and the syndications associated with it. Someone asked, are there syndication investments after the land is purchased and entitled, or only for ground up construction? So just kind of going to the spectrum of how people can get invested on what these different investment vehicles out there are related to townhomes.
Yeah, definitely, and it'll depend on who the sponsor is and who the developer is. At what point they bring investors in. Again, I'm just speaking from how we do things. We generally buy the land. We take it through entitlements before we start raising money from investors, and so we like to have a project that's as ready to go as we can before we start raising money from investors. And again, it's just to kind of take out some of that risk of but certainly there are opportunities out there where you can come in from the very beginning, help buy the land, see it through entitlements, and hopefully if you're an investor doing that, you would see you would participate in kind of the upside of adding value to the land through the entitlement process, right? So if you're looking at opportunities and that's an opportunity you're looking at where someone's asking you, or you have an opportunity to come in at the very beginning on the land, that's something I would ask for as an investor. How do I participate if I'm coming in very early? How do I participate in the added value, the value that's going to be added to the land by taking it through entitlements and approvals? But yeah, you can, depending on the sponsor and the developer, you could come in at any point along the way.
Great. No, good. Definitely a good point to make, because that's one thing I never really would have thought about asking, was kind of where in the stack of these different investments come in. I'm so used to the single family side of things and the larger commercial and industrial side that I always like to learn something new. Let's see. Okay, another question. Let's see. Okay, this one has to kind of do, I'll paraphrase this, but it's regarding, with there being a shortage of homes in, dwellings in the United States, what are some things that you kind of go through as far as market analysis to understand what might be a good fit or not? The the easy thing is to say, invest where locality is kind of key in real estate investing, to be able to put eyes on something and understanding your own market. But from your perspective at a high level, again, you understanding Utah so well, but if you were, again, for the thought experiment, going to supplant to where we're at in Florida, what would be some things that you would really kind of look at as key market indicators to figure out, saying, hey, this makes sense, this doesn't, with regard to how it works in the townhome realm?
Yeah, no, great question. And yeah, and I'm glad you asked, because I'm kind of a market analysis nerd. I mean, that's been, a big part of my whole career. And, I teach a class in it at the university. And so I love that question. So, what we do is, yeah, I try to stick to what I know. There's a lot of people that are moving, here locally, that are investing in kind of the Southeast and, different parts of the country. And that's the first thing, is like, I don't know anything about those places, right? I know Utah really well. I know kind of surrounding states really well, because I've worked in them for a long time. And so that's the first thing, is like, I stick to what I know. I have kind of the local knowledge. The next thing is that it goes really back to that supply and demand chart, right? We look for opportunities where there's a lot of growth, and the supply hasn't quite caught up. So this project that I showed in southern Utah, it's a perfect example of that. There's a university there, very fast. It's the fastest growing university in Utah. There's a lot of things going on with jobs, and job growth, and then just kind of natural population growth, and people being priced out of another community nearby that's gotten really expensive. And so there's a lot of growth in this community. And so that's something that's like the number one thing that I look for is, what does the population growth look like? And, taking one step back, what's driving population growth? It's jobs, right? And so what's happening in the job market, or is the place that I'm looking at, are they adding a lot of jobs? Is there new businesses moving there? This community that I'm talking about, there's an inland port, we call it a big industrial development that's going in there, that it's just getting off the ground. That's going to add a lot of jobs to an already fast growing community. And then the second part of that is to look at the supply, right? So this particular place where we're looking at, there hasn't really been anything kind of purpose-built rental communities built there for, until recently, for 10, 20 years, right? And so that's what we look for, is an imbalance in demand and growth, and in the supply.
All right, fantastic. Well, I think that really it's kind of a good place to end up. We've gotten through all of the questions, and again, it was great getting to connect with you again. I think from an investor, a personal investment standpoint, and the professional standpoint I have here, this is a really interesting asset class that bridges that gap between people that are real comfortable with the single family but want more throughput, but aren't necessarily individuals that are looking to kind of get into the larger commercial multifamily. It gives that blend of passiveness that people like, but also the investment class where it's easy to understand. It's basically taking two or three single family homes and just stacking them next to each other. A lot of the same things that they're used to from that perspective. And even if you're not necessarily a passive investor, understanding, this from a development or a purchasing play is not the kind of grand educational bell curve that you have to ride, the curve that you have to ride for commercial real estate coming from single family. So it's something, again, I haven't really seen a large amount of traction in, at least from the client perspective, on our side at Advanta, which, again, I don't know if that's necessarily just from just lack of education, but that's why we like to have people like you on to help bring these interesting ways of thinking to real estate and development, because it certainly is a very attractive market from that perspective for a lot of people coming from the single family space. So Josh, are there any kind of closing thoughts that you'd like to leave everyone with before we end this off here today?
No, I'm just happy to help. So if I can help with anything, or you have questions about anything we've talked about here, or you want to go a little bit deeper, yeah, I'd love to connect with you. And again, my email is there. LinkedIn is a great place to get a hold of me too. I post a lot of stuff there about, I just started actually kind of documenting through videos one of our projects. The idea there is to kind of document from start to finish the whole process. So I just love to be able to help and share my experience, and so yeah, please feel free to reach out if I can help you with anything.
All right. Well, again, thank you so much. The most valuable asset we all have is our time. Appreciate you carving out some of us for it today. With that said, if anyone does have any questions, please do reach out to Josh. I know there were some questions about rates of return on these kind of investments. I'm sure he'd be happy to have that discussion with you on an offline chat. Not a problem. If you are wanting to go back and review some of this will be posted to our YouTube channel within 48 hours. And if you want a copy of the slides, they are attached as a handout here as well. So with that said, we'll go ahead and leave this off again. Josh, really appreciate you being with us. This has been another educational webinar for Advanta IRA. Thanks everyone for joining, and have a great rest of your day.